Look, we think they've got further hikes to come. We think they go again next month and the month after and the month after that. But we are of the view that when they get to 2.6, and that might be about where they stop, at least for a while. That's where we've got them by the end of this year, by November. And then we've got to consider that, of course, at that point, we think that inflation will have peaked in Australia. We think the unemployment rate will have troughed and will be starting to rise around the turn of the year. And then critically, of course, we've got a global slowdown that we're also dealing with. US growth is slowing, European growth is slowing, China's got some growth challenges, and global inflation looks as though it's likely to peak as well, in our view. So that contributes to our view that they get to 2.6, and that is about it. That's enough to slow the economy. That, of course, would mean that in that period, by November, in our view, they would have hiked by 250 basis points in a very short period of time in the scheme of things. So that's a pretty big move. And in Australia, most of the mortgages are variable rates. So a lot of it's going to feed through pretty quickly, in our view, in terms of slowing the consumer and slowing the growth story down.
Now, Paul, just to get you over a little bit of the commentary, they have upped their inflation forecast to bang in line with what we got from Treasury. They're saying that 7.75% throughout the course of 2022 on the headline basis. But do you think that when you think about the RBA and you think about their hiking schedule, what we're seeing right now when it comes to the property prices is going to have to start weighing in on their thinking, considering the impact that could potentially have?
Well, the main way to think about the property market is really how it feeds through to what the consumer is prepared to spend. And house prices are starting to fall, as you described. There's an acceleration in the house price decline going on in the two major cities, in Sydney and in Melbourne. But the critical feature is here, when does it start to weigh on consumers' willingness to spend? We started to see some early hints of that in the retail numbers that we got just recently. We think the consumer is going to pull back quite quickly as house prices decline, in our view at least, 15% over the next from their peak earlier in the year to later in 2023. A 15% decline in house prices would typically likely slow down the consumer because you get a negative wealth effect, take away confidence. We've already got a sharp fall in consumer confidence. So that's the mechanism that we need to think about. How much does that cooling housing market slow the economy down and then take some of the pressure out of the domestic economy and contribute, therefore, to some downward pressure on inflation? And then we've got the overlay, of course, of the global inflation impact, which I've already described, which we think is nearing its peak as well.